Well, welcome to our very first episode of the Nebraska Soybean Board Market Roundup. I'm Susan Littlefield. It's going to be a great opportunity to sit down with two very well known commodity brokers to talk about what's been happening this week in the market trade. We're going to look at a variety of different things, and one you might not think we'd be talking about, and that's fall armyworms. It's playing a big role in what we're seeing within this wheat market. We'll talk about how wheat's making some moves. We'll also be looking at, are more producers going to be holding this grain versus taking it to town? Are we going to see it more going in the bins, or are they doing some marketing off the combines? And of course, we had a quarterly stocks report this week as well. Well, we're going to bring onto the screen two of my favorites. Joining us is Sue Martin. Sue is with Ag and Investment out of Clarion, Iowa. And you see Darin Fessler on the screen as well. Darin is with Lakefront Futures. He's based in Lincoln. To start out, guys, who wants to dive in first? I think the wheat market's been one that's been playing along well with the corn. What's been going on in this wheat market, and can we blame it on dryness and the issues with fall armyworms? Who would like to go?
Ladies first.
All right, Sue, you're up.
Well, I think first off, the government report was very bullish to wheat, and that ignited a market that has come out of the harvest lows and been trending higher, but hadn't really taken off real explosively. And so we've seen that the last 2 days, today and then on Thursday. But I think that when you look at wheat, it's an evolving market. Barley prices across from Montana all the way to Spokane, Washington are running at $11 a bushel, and they're not getting any bought. And so demand for feed is very strong. Wheat's going to outprice itself, and that puts support under corn for feed. But when I look at wheat, this is a market, it hasn't exceeded its highs yet. Those highs are still at least 30 some cents over us. Will the market take that? I think we need to watch this because that wheat is in a different time of its crop year than corn and soybeans. So we'll see if it's able to exceed the highs here, or like so many markets, make a double top and then buy time again.
Well, what about for you, Darin? I mean, you brought up the fact that wheat has definitely been a market mover lately. What's catching your eye in this complex?
I look at the Paris wheat, the milling wheat prices, which are continuing to make a new high. When I look at domestic wheat prices, whether that be Chicago, Kansas City, or spring wheat, I first initially, what is the Paris wheat market doing? Usually that is the first indication of, to me anyway, that we're going to see more higher prices to come here, domestically. On December Chicago, we continue to hold that 100-day moving average. We are 30 some cents off the recent highs here. It's a very, very strong close today. I'm looking for Sunday night strength into Monday. I want to see follow through on days like today. If we can get that, I do think there are some outside markets. Take a look at cotton, and there's just different outside markets that continue to push higher, make new sharp moves to the upside. So I think we got to be cautious a little bit, but the good fundamental story in wheat, out of everything that we had seen yesterday in the quarterly stocks, it was definitely wheat, definitely a bullish story there in my opinion.
There's been a lot of talk, and we talked about this earlier this week. The fall armyworms have been absolutely crazy. We know that's caused concern for alfalfa growers, but now we're seeing reports come out of Kansas. Saw a report come out on a Friday from the University of Nebraska as well about winter wheat and concerns with these fall armyworms. Who'd ever think you guys would be entomologists? What are you hearing? What are you hearing from folks? Sue, I know you've had some conversations with some growers in Kansas. What are they telling you and concerns with these armyworms?
Well, they are concerned, but they need to, according to K-State, they need to let a good freeze hit, and that will kill the armyworm. And then they'll be able to, plant their crop and move on. And the forecast continues to hold pretty dry. So they're going to have the opportunity. So it's going to be all about temperatures. But if they can hold off and see if they can get a cold snap here, the forecast continues to be pretty warm through much of October. So that may not be a helpful situation. But I think that that's the key because it certainly will weigh on the crop. And our belief is that wheat will be a very bullish market as we move in towards 2023, this is a market that I think, well, I'm thinking there's many different markets that are going to be in a hyperinflationary feel, and wheat is certainly one of them. Of course, we're watching Europe on natural gas and realizing we are so cheap, but the weather is playing against us a little bit here for the moment. But yeah, going back to wheat, I think it's a situation that is going to evolve with time as we move on in more so into 2022.
You brought up natural gas, and I know natural gas, ethanol, and even propane have been big concerns. Darren, what are you seeing in this market fluctuation and what's the steam behind all of it?
It's a great question. I just had a conversation with another trader about this, and to me, some of this seems pretty intentional. I know Europe is very, very heavily dependent on Russian natural gas. If I look at some of the natural gas that's priced off of Europe, and you take a look at the prices here, I mean, we're talking multiple hundreds % more increase in Europe natural gases prices than we are here. So to me, we seems like we never had these issues a couple years ago. Now we're having some power outages in China. So is there something going on behind the scenes that we just don't know? And to me, the world's not running out of natural gas. The U.S. is not running out of natural gas. But I think because of some of this inflationary pressure of all of these central banks around the world, it's giving the light to traders to push these markets much higher. And I think that's what you're seeing. There is demand for some of these things, but again, I think that once we get into the more of the winter cold snap here, we could be looking at much higher natural gas prices, because you look at what's going on as far as inputs, you look at urea, phosphate, and you look at it all, it's all going higher into 22. So I do think there is a little bit of a downward pressure here in the near term as far as the U.S. markets. But again, we are far, far cheaper than European markets at the moment.
Having said that, do you think, Sue, that this could cause a few guys to say, maybe I do need to send my grain to town versus paying for it to dry it at home?
Well, this is a year where I don't think they're going to have to dry it at home. And I know on our farm, of course, we're drier than you guys, but you guys are pretty dry too. Um, our corn's testing 13%. And, the crops are going to come out really easy this year. But the key is when I look around the world, okay, like urea, fertilizers, and even now chemicals is the next thing that's going to start to escalate in costs. I think we have to keep in mind that natural gas is a component that's put into fertilizers and producing those things. And China has banned the exports. China overnight told their commercial suppliers that they should be looking at booking all of their crude and natural gas needs before they get closer to winter. Now, we're pretty mild here in the US right now, but you look at Brazil and their supplies of natural gas are extremely tight. So I think there's a good story under here. I think we're marking some time for a moment here, which is justified, and then we start to run. There were places in Europe that traded as 32, and here we are just, under 6. We're around 5 point something, 5.3 or whatever. So I think there's a story. I think it's got a hesitation for a moment, but it has a little more longer term life to it.
So I'm going to throw this out to either one of you. Do you think because we're going to see these higher costs going into 2022, that could change up a little acreage numbers as guys and gals look forward to next year's planting season?
I absolutely do. There's a lot of conversations already that I've had that a lot of guys are considering, being on beans this next year. And if you take a look at what are the, input costs, you look at rents that are going higher, a lot of producers they're going to be looking at $100 to $200 more an acre just to plant corn. And so you start punching the, where's the break evens on this? You go to $4.50, $5 cash. It's nowhere near as attractive as it was a few years ago. So I still think beans are providing you an opportunity here to lock in some costs there and to lock in some decent futures prices, because I still think that the trade that I have right now is, long the D's 22, short, November 22, and it continues to work out, and I continue that ratio may continue to narrow.
All right, Sue, what are you thinking for next year's planting season?
Well, I tend to agree. You're looking at cotton, and we've pushed futures over the 100 mark. Cotton producers had some problems this year with too much rain. And you look at rice, and I just think there's many other markets here. And like I say, when you've got barley at $11 a bushel and you're not even getting anything bought, I think that puts pressure on the wheat to be able to move higher. I think that when I look at corn, we know that the input costs are high. Cash rents are going up. We had, and this was high for our area. There was a recent farm that came up for rent, and there was a private auction for it, and it went for over 500 an acre. And most other people right now are around 380 to, or not even 380, they're around 300 to maybe 350, 380. So 500 was like catching everybody's attention. And of course, people having to rent, we're taking deep breaths. But it's going to be a tenuous year next year for producers. But what are we saying? You can't market your new crop because you don't know where, if you haven't bought your inputs, you don't know where you're going to end up. And in the meantime, weather is the unknown for next year, which we think is going to be another tenuous year.
Real quick, Darin, what's your watch to for Sunday night?
I'm going to watch the wheat market here. I want to see follow through there. I think a lot of that market today, it was encouraging corn to move higher. If not, I think the pressure in beans is going to keep corn at bay here a little bit.
All right, and Sue, for you?
I so agree with Darin. I think he's right on. I think that when I look at the markets coming into this next week, I'm watching the beans right now. I think we could see an 11 in front of the beans. But we did get down to 1242 today on November beans, and the June low is 1240 and a half. Very impressive that all year we've held that low. So if we could have a potential double bottom here, and you could see beans try to give us the old college try, will it succeed? I'm not sure. I'm a little skeptical of corn too. I'm not sure this rally ultimately, not that we can't go higher first. I'm wondering if it could be a year that you turn around, drop down into November, December. It would be a shock for most.
Sounds good. Thank you so much. Sue Martin and Darin Fessler joining us today. Just trying to remind folks that commodity futures and options do involve substantial risk of loss, and they're not suitable to all investors. That's this week's Nebraska Soybean Board Market Roundup.